What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF, of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about this marketplace regularly here on the channel. I'm fairly concerned with the price action, to be quite honest with you, at least from the bullish perspective. We had this nice break out of the 4-day balance in here, nice gap and hold on the Wednesday session, of course, with the CPI data that came out today. All of that was taken back. We've closed back down underneath the top end of the balance, thus putting into play a look above and fail. As we know, the target should be the low end of the balance here at 443.50. If we take a look at the 30-minute time frame, there's one last saving grace here. This is the only thing going for the chart right now for the bulls. There's potential for that short-term support trend line to hold up here, especially with the last 30-minute bar that printed as a hammer. We'll ultimately see. It would have to recapture the top end of the range here very, very quickly on Friday's session, tomorrow's session at 451.83, for me to think of this as more of just a fluke. And then from there, obviously, it's all about the test of these equal highs close to 457.50. So in my estimation, a lot of damage was done on today's session. Of course, as we pointed out, CPI had a lot to do with that. If we break the support trend line, it's got to be a move to here at 443.50. That would fulfill the look above and fail, taking us to the low end of the range. That's the target. From the daily after that, again, remember the importance of that level. Not only is it the bottom end of the range here, it's the top end of the larger balance range where we really took some time, lots of volatility to figure that out to the upside. So if that starts to go, not looking great for the S&P 500. The last line of defense, like this is the end all be all for the bulls, is 437. If that doesn't hold as a higher low, so from here to here, if that's not the higher low, I think we're in a world of hurt for the first quarter of the market here in the S&Ps, quite frankly. So that's what I'm thinking about, especially with today's action, the upper wick, the fail, the look above and fail rather. You know, things aren't looking pretty, but we have a couple of things to watch out for that may act as saving graces. If they don't, obviously you know the drill. We're looking for lower here in the S&P marketplace. If it takes out the high end, this 3-touch pressure cooker top, it's got to be, then just above that resistance here at 460 quarter. After that is really where the range opens up to 470.50. But based on today's activities, not really looking fantastic, right? It's not like we even supported off the gap fill and turned around from there to hold up above the top side of the balance. It just didn't happen, right? So the sellers are looking decent here after what I thought was a pretty solid break on the Wednesday session. Ultimately, CPI was too much for the markets to handle. So if you enjoyed today's video, if you learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.